The Reserve Bank and banking regulator are under pressure to act on house prices. Why is the RBA reluctant to stop this housing boom?
Yeah, good morning. It's a really vexed question, isn't it? The RBA and APRA, the Prudential regulator responsible for banks, they're really trying to walk a difficult tightrope here. To some degree, they're trying to look at the broader economy and decide what steps they should or need to take to make sure the economy continues to recover. And low rates, in their view, is a really important part of that. Of course, on the flip side, we're seeing house prices going through the roof because of those low rates. Now, the RBA's only really got that one lever. It's either up, down, or neutral, and it's planning to hold rates where they are now for the next couple of years. But we know that house prices are continuing to escalate. The word is they're using the number of first home buyers as a proxy for how available or affordable housing is right around the country, but particularly in the capital cities. To the extent they see that number starting to fall, they may feel forced, from their perspective, maybe some of us might say welcomed, to take some decisions and make some moves to really restrain the pace of growth of house prices right around the country.
It's quite fascinating, isn't it, Scott? Is this the property boom that shouldn't be almost? Because that industry just had so many interruptions during the pandemic, and here it is now. It's extraordinary.
Yeah, that's right. If you think about, May, June, July last year, there was no shortage of people out there saying it's going to be a house price crash, 30, 40% falls. Of course, they were the usual suspects who also always predict house price crashes. So any set of circumstances will do. But there was a real concern. Even the big banks were out there with reasonably, negative, quite awful in some circumstances. Some saying, I think it was 20% was the largest I saw from one of the major banks. That would have been really material. Of course, the economy didn't falter as badly or for as long as was possible. That recovery with low rates meant that we simply all felt like, or not all of us, but most of us, we had more money in our pockets or the same amount of money in our pockets. Our jobs weren't at risk. And yet we could go to the bank manager and say, how much can I borrow? The bank manager was saying, well, about 25% more than you could this time last year. And unfortunately, for those people who are trying to get into the housing market now, plenty of people said, great, thank you very much. I'll take that higher borrowing capacity. I'll go and bid at auction against everybody else with the same circumstances. And that's why house prices are going through the roof, simply because it's more affordable at these lower rates.
Yeah, it's fascinating to see how it's playing out. Now, Scott, the ASX is expected to be buoyed by another rally in New York overnight.
We've seen some really strong share price. I'm talking about recoveries. Our market not yet at the February 19, 2020 highs. We're still chasing that down. But the American market hit those numbers, I think, before the end of the calendar year last year and continues to go ahead. Another record overnight for the S&P and the Dow Jones, and really strong gains, 1 and 1.4% respectively. These are really big gains in the US market, buoyed by, of course, those large tech companies that continue to just go further and further and further ahead. That should be good news for our market here. The question, of course, for us is how much can we capture those same gains, given our market is dominated by our banks and resources players, not exactly new economy companies, and that's no criticism, but it just means that the gains and the sheer growth, when the Amazons and the Googles of the world already so big are growing at 15, 20, 25% a year, our biggest banks and resources companies can't simply keep up with that pace of growth. And so I think that the gap will continue to grow, but good news in the US is absolutely good news here, and we should see our market rise today too.